when you are covering Microsoft, one assumes you have to model in this relationship with OpenAI, both the financial exposure, but the technology exposure as well. What did you hear then, and what do you make of it?
So first of all, congratulations on breaking that news story. So that's incremental development. And we actually published our note later yesterday, and we didn't cover the detailed reporting that you guys did. So that certainly is a wrinkle, but it does not change the overall thesis. Our view has been that the partnership has more legs to it than commonly believed in the media and in the Wall Street community. There's a lot more to be gained on either side of the fence, be it access to technology from Microsoft's perspective or access to distribution and a world-class customer base that Microsoft brings, and the ability to certainly not to overemphasize the very common thing, to train models and run on world-class infrastructure. So I think this if this were to progress to its ultimate fruition, that if the deal were to be signed, it would take away a hurdle, at least in investors' perspective, as to what is the time duration that you can bank in your model and what is the longevity of this partnership, because the AI revenues have come out of nowhere seemingly and have scaled and helped Microsoft's Azure business propel itself to a north of 30% growth rate, which we thought was unthinkable 2 years ago. So both parties have so much to gain from this, and I think it's incrementally.
Let me ask it this way. What has the biggest net benefit to Microsoft been from the relationship with OpenAI?
Many things. First of all, that they are tech forward, and you could argue that in the cloud computing cycle that they were not exactly the first ones out of the gate, but in this AI cycle, they're the first ones out of the gate. And there's so much of a cachet and boasting right that you have, especially with CEO Satya Nadella, who is a rank insider of the company, who's been there for a long time, being able to pivot the company at the right time. That's of enormous strategic importance, right? From a financial perspective, what it has allowed the company to do is, although it has required a lot of capital build out of a scale that the world has never seen so far in the technology world, and maybe in broader industry as well, it has allowed the Azure business to grow at scale. So depending upon whose numbers you look at, we're roughly close to an $80 billion run rate for the Azure business. And AI has helped keep that growth rate steadily in the 30+% range. And if we get an inflection point with respect to AI moving up from at Goldman Sachs, we have this thing that AI is stuck at the infrastructure layer. For every computing cycle, you need to move to the platform and applications layer. When you make that progression, you see monumental shifts that are happening in the market. So that's all to Microsoft's benefit.
The $80 billion run rate for Azure comes in tandem, Kash, with a more than $80 billion need to spend on capital expenditure. Is that currently totally vindicated in your mind's eye? And will we see it increase?
It's a dollar for dollar, right? So a dollar of capex gives you a dollar of Azure revenues, roughly give or take. And within that, there is a slightly more inefficient conversion of the dollar of capex into AI revenue and slightly more efficient conversion. So we think that it is the right trade-off at this point in time. And the good news of your Microsoft is that you're running a very diversified business, that all the capex is not extremely punitive to your free cash flows. I mean, you could run a model where you're not generating any free cash flow at all. That's not Microsoft's thing. So they do generate a pretty meaningful, significant free cash flow margin because of the health of the overall business. You've got to look at Microsoft not just in the context of Azure, but there is a broader Microsoft Cloud business, which has the M365, and then you have the server on-premises business, and a couple of other businesses that are equally significant in terms of revenue scope and significant drivers of profitability. So they've got the ability to generate the cash to be able to fund this capex. And that's a very important consideration. So as long as the returns keep coming and you're able to generate a dollar of revenue for every dollar of capex, as long as that algorithm, broadly speaking, holds, I think it's the right trade-off for the company.
There have been concerns, though, surrounding Microsoft, whether or not it's just how great the product is to use when you're sat within its ecosystem, but also the cyber issues that we've seen running front and center this month. Kash, how much do you expect Satya to really talk to those issues?
I believe that there is a bit of a lag between the actual ChatGPT technology, that is OpenAI, broadly speaking technology, and how much of that gets incorporated in the Microsoft Office CoPilot. And I believe that lag is likely to reduce over a period of time. And we're also implementing consumer-grade technology in the enterprise. I mean, that is a completely different beast. So I'm not surprised to hear what you've heard with respect to where the product is relative to enterprise expectations. And I would argue that the product is, I use it personally at Goldman, and it's come a long way since about 6 months, 9 months ago, and it's likely to go a long way in the future. That version of CoPilot that we use today is going to go through significant enhancements.
Right.
The ability to customize it, tailor it to your workflows, all that's going to get significantly better. So the buzz is going to get better.
One thing I've always wanted to ask you, Kash, is present day, middle of 2025, Microsoft is the world's second most valuable company, right? And if I think back to when I arrived in Silicon Valley in 2018, but even 2 years ago, did you see that coming, where Microsoft would vie with NVIDIA to be the most valuable company in the world based on the direction it was headed, pre-OpenAI and all of that?
So when I launched coverage at Goldman in 2021, we had a big price target on Microsoft, and the pushback that we got was, you're implying that the market cap can grow by another $500 billion to it's already a multi-trillion-dollar market. Or what was it? I think it was a couple of trillion.
Yeah.
And I think what it comes down to is if you unlock a big tech cycle, the dollars at stake in every tech cycle are larger and larger. And if you are leading this cycle as opposed to being a fast follower, who is to say what the new market? Nobody envisioned this kind of playing out the way it did. So, and we're still early in AI. So if you listen to the economists, they're talking about how the labor market could be incorporated by way of AI. If that were to happen, you got a lot more value creation along the way. So I'm pleasantly surprised by how quickly it has happened. But I was just remarking earlier that Microsoft stock has actually performed in line with the NASDAQ finally since the launch of ChatGPT. For a while, it was lagging. I kept telling myself, this is a company that facilitated the birth of this AI revolution along with NVIDIA and OpenAI, and their stock is lagging. It doesn't make any sense. Right now, finally, we're just about even, so I feel vindication.